Limited partners, they are responsible for cutting a check, and that's really where their work ends. Now, I do encourage limited partners to understand the economics of the deal and the financial assumptions because they are contributing a large portion of money. And so they want to understand why this deal works, why this is the right market to work into. And I think there's some basic things that they can look into. Multifamily is definitely a team sport, and there are many people on this team.
Yeah.
There is so much to know and so much to do. One of the most critical steps is making sure that the right team structure is in place. And again, that's having the right legal professionals and tax professionals involved.
Thanks for joining us on another REI-NWA podcast. My name is Coley Bailey. I'm your host, and I'm a broker and team leader at the Lone Rock team at Fathom Realty. And today I'm pretty excited. This is episode 23, and this is going to be good because we are joined by Josh Deblaay.
Good to be here, Coley.
Yeah.
Good to be here.
And you are with, you own Vidascend.
That's correct.
Yep.
Yes.
And what's the full name? Vidascend Investment Group.
But Vidascend's fine.
Okay.
It's a mouthful.
Yeah. And we're going to be talking about the multifamily space, how people can get into that, some of the differences and different ways that things are structured. So that's what we're going to talk about today. We do have an upcoming main meeting on March 12th. It's going to be at the Hyatt House in Rogers, and it's all about big profits through multifamily investing.
Awesome.
And it's going to be a panel. We're going to have a few people there. Josh is going to be one of them. So, let's rewind the clocks a little bit and just tell us where you're from and how you got into this thing.
Yeah, absolutely. So my name is Josh Deblaay. I am a former, current operations leader turned full-time real estate investor. I have experience in operations leadership, management consulting, tech, and really just large program execution. My experience spans from merger and acquisition integration to distribution network consolidation to cost optimization projects and everything in between. Originally hail from Grand Rapids, Michigan, but my wife and I, we actually moved here with our two daughters just a month and a half ago. We've moved 7 times in the last 4 years. So excited to put down roots in Northwest Arkansas.
Fantastic. And you and I met before, and,
Yes.
and you were telling me about all the different projects that you've got and all the different things that are going on. So, it's great. So tell us a little bit about what is different between single-family investing and multifamily investing. Two totally different worlds.
Yeah, absolutely. And I'll start to wind back up just a little bit and talk about my journey. Really, I started investing in real estate 3 years ago, but 4 years ago, I, through colleagues and mentors and family members, they were active in real estate investing. I'm a naturally curious person so when we would have lunch or dinner or grab drinks, it always came up and I asked a million questions. 3 years ago, I finally partnered with my mother-in-law to actually buy my first long-term rental in South Florida with my wife. And shortly
Single-family home.
Single-family home,
Right.
That's correct. Long-term single-family home in South Florida. And then within 8 weeks, we actually acquired or put funds down for our second property. So it happened fast. It was really exciting. I should say it took a while up front, but then as things go, it started turning fast. Really enjoyed that process. And at the time, my investing goals were different. Then we were introduced to multifamily real estate investing, and multifamily real estate, specifically syndications, were a better fit for our long-term goals and objectives. And so the last 2 years, we've pivoted to multifamily, and last year we actually closed our first 2 deals, one 141 units in Tucson with partners, and then a different group, 43 units in Salt Lake City. The single-family home is a great way to get started. It's a much lower barrier to entry. It's more hands-on.
Yeah.
But it's harder to scale. And I'm not speaking in absolutes, but it can be harder to scale. It can be harder to get additional loans past a certain unit count. It can be harder to find a property management company because you have to pay them a larger share because the economies of scale are there. In multifamily, it operates much more similar to a business.
Right.
And you get those economies of scale. It's a more manage the manager situation. So you aren't necessarily hands-on with the renovations, but you have a property manager, a general contractor. And so those kind of attributes were a better fit for my goals and the direction we wanted to go.
And it's more like buying a business
exactly
than
That's exactly
just buying
correct.
a whole bunch of random properties.
That's exactly correct.
Yeah, so it's going to come as a package deal.
Exactly.
Yeah, and especially with your history in mergers and acquisitions and your corporate
Large
structure.
program execution.
Yeah.
Exactly.
Yeah. Fantastic. All right, so we're going to talk a little bit more about how you can get started in this space right after this word from our sponsor.
Are you struggling with real estate code compliance? Let Ordinal, your AI navigator, simplify it for you. Receive clear answers to your nuanced compliance questions in seconds, with citations included. Currently, the Ordinal beta version specializes in the Northwest Arkansas cities of Bentonville, Fayetteville, Springdale, and Rogers. Join the beta version now and get your first month free using the promo code REI. After that, it's just $12 a month. Visit breakground.ai/Ordinal or click the link in the description below. Start incorporating AI into your real estate workflows today with Ordinal.
All right, Josh, so tell us, what are some of the ways that a new investor could get started in multifamily, maybe more affordably? I don't know, different ways to get started, different pieces of this puzzle.
Yeah, absolutely. So a multifamily syndication is really a group of people pooling their resources together to buy a property larger than they would be able to acquire on their own. And that's typically made up of a general partner team and or the active investors, and limited partners or the passive investors. There are higher financial commitments for the general partner team because they are responsible for putting up the hard money. When you put a letter of intent down, they are raising capital. They are expected to invest in the deal themselves, and there's more risk. As a passive investor, you can invest in the deal, but you don't have necessarily all the risk associated with that. I will say with multifamily syndications, because you are buying a large asset, they typically have some minimum investment threshold. And so, it may be $50,000 or $25,000 to acquire, but when you consider, the cost to acquire a single family home, that may be, an equivalent, equivalent cost. And so those are kind of your two avenues of getting involved, and kind of how you can break in.
Right. Okay. So tell us about the syndicator of a syndication. What is that role, and how do they bring everybody together?
Great question. So the general partner team, or the lead team, sometimes they're referred to as that, they are responsible for sourcing the deals, going out into the market and really understanding the market, working with brokers to find the right investment opportunity. They work with general contractors and property managers to build a business plan. They work with the lenders to get the appropriate financing. They make sure they have all the appropriate contractors lined up to execute the business plan, and they see through the execution. Once they have a viable investment, then they'll work to find passive investors, limited partners that
they'll make an offering.
Exactly, to be able to fund the deal. And so limited partners, they are responsible for cutting a check, and that's really where their work ends. Now, I do encourage limited partners to understand the economics of the deal and the financial assumptions, because they are contributing a large portion of money. And so they want to understand why this deal works, why this is the right market to work into. And they think there's some basic things that they can look into, but they aren't necessarily responsible for any of the work. And that's kind of how those two roles play out.
Yeah. So tell us a little bit about how the laws are in terms of who can be a limited partner, who can be a passive investor, the credentials that person might need to have.
Yeah. Invest in a multifamily real estate syndication. There are kind of two investment types. And first of all, I am not a legal or tax professional, so please speak to those professionals for the appropriate advice.
And they're also a critical part of the team.
But they are a very critical part of the team. And so depending on the investment vehicle, if it is a 506C, that only allows accredited investors to participate in the deal. And there are different thresholds that they must meet based on net worth less their primary residence or income. If they do not meet those, they're not able to participate, but they could invest in a 506B that still requires the investors to be sophisticated and to understand the economics of a deal and to demonstrate their knowledge, because again, it's a serious commitment.
Yep.
And so that's why we, again, go back to encouraging everyone, the general partner team especially, but also limited partners, to educate themselves on understanding multifamily real estate. So then they are able to participate.
Yeah. Fantastic. What are your thoughts on crowdfunding and all of that coming up?
This might be a little out of my space, my wheelhouse, to be honest.
Yeah. I mean, there's just a lot of talk in the space of like, oh, the laws are going to change, and then everybody can invest in this. And I don't know if that's a great thing.
I'm definitely not the expert to speak to the space, but I know there's a lot of issues with making sure that people are investing in credible deals. And so I can't really speak to that, but I'd be curious to see how that changes and evolves over time.
Again, the legal team is super critical.
They are so important.
Yes,
they are so important
to keep everything in line.
Exactly.
And create all the structures, and they might create several different structures.
And that's a great point. Multifamily with a single family property, I can go, and when I bought our properties, I may work with one or two people. I may have an informal mentor, but you can go buy that by yourself. It really doesn't require too much knowledge. Or multifamily is definitely a team sport, and there are many people on this team.
Yeah.
You can try to take down a property by yourself. It is very difficult, and I would recommend against it because there is so much to know and so much to do. One of the most critical steps is making sure that the right team structure is in place. And again, that's having the right legal professionals and tax professionals involved.
Absolutely. All right, there's so much to get into. And we're going to have not just Josh, but we're actually going to have a full panel at our main meeting coming up. Again, it's going to be on March 12th, 2024 at the Hyatt House in Rogers. We're going to have Alexandra Tirado. She's building some condos right now in Bentonville. She's got some amazing projects going on. We've also got Joel Treat, who is the executive broker at the Weichert Griffin Commercial Division. Anthony Doss is another multifamily investor. Of course, we've got Josh, and then we're going to have Nate Robinson as well, who was on a previous episode. If you haven't seen his episode, go check it out. He is a lender at Today's Bank, and just a real fun guy. So awesome. He had a great episode. So make sure you're coming out. It's going to be 5:30. Doors will open. We'll get started right around 6 o'clock. Again, it's March 12th, and it's $20 at the door. Or if you are an REI-NWA member, of course, it's $0. And you can be an REI-NWA member from anywhere in the world through our website, and you don't necessarily get the benefit of the in-person networking unless you're there, of course, but we have recorded years worth of these programs, and you can get access to the backlog of all of those on our back-end YouTube channel and on our website. And so definitely encourage you to join REI-NWA, become a member, and you get so much incredible value. Again, years worth of programs from experts just like Josh and the panel. And so thanks so much for coming, Josh. This is great, man.
Thank you, Goalie.
Yeah. Well, we'll catch you on the next one.